in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Cathie Wood, founder, CEO, and Chief Investment Officer of ARK Investment Management, discusses Bitcoin's promise, Fed rate cuts, and crypto support in this video. Watch her insights reveal future trends.
I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds because, and I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem.
Cathie, even some of the people who believe most firmly in the crypto story here, they are still worried about those meme coins and a lot of retail investors being stuck holding the bag. And another thing that's happening at the same time is you have a lot of exchanges looking to loosen their listing standards. Do you worry that this could go too far, that too many coins that are going to hurt retail investors ultimately will be listed on too many exchanges?
Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Buyer beware of what specifically? Because you did say that you believe that there are only certain crypto assets that will gain the most spoils. What do buyers need to be aware of?
That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.
MicroStrategy's aggressive Bitcoin strategy is facing fresh scrutiny as concerns mount over its growing debt and dilution risks. The company has taken on significant financial obligations, with a $1 billion debt due in 2027 and negative free cash flow, raising alarms among investors. Recently, the firm launched a new perpetual preferred stock offering, nicknamed STRF, or Strife, in a bid to raise cash. This move has been seen by some analysts as a desperate attempt to shore up liquidity, especially since MicroStrategy continues to buy Bitcoin despite mounting pressures. While its smallest Bitcoin purchase of 2025 may signal an easing enthusiasm, the company's $43 billion Bitcoin holdings could become a liability if forced into liquidation. Experts warn that selling these digital assets might trigger a downward spiral, impacting both the stock value and Bitcoin's price. The firm's aggressive financial maneuvers have sparked debate among market watchers, with many questioning its ability to balance investor confidence and growing tax liabilities. With risks of dilution and financial strain looming large, MicroStrategy's bold Bitcoin gamble remains one of the market's most watched and controversial plays in the corporate investment landscape. Investors and analysts closely monitor the situation, as it could reshape corporate digital strategies.
We post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period.
So what does this mean in terms of where you see things going? Do you see more of a sell-off before things get better in these risk assets, Bitcoin or otherwise? How do you know that we're not at the lows?
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down, and we do think we'll see one or two negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening.
What do you see as the rate path for this year? The Federal Reserve kicking off its two-day policy meeting today. We're going to hear from Jay Powell tomorrow. How many rate cuts do you see happening this year, Cathie?
Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3.
Investor sentiment around Bitcoin is showing signs of a potential recovery as easing inflation concerns stir optimism ahead of the Federal Open Market Committee meeting. After a 2-month downtrend and a current price near $84,315, many experts believe Bitcoin could climb back to the key psychological level of $90,000. Marcus Thielen, CEO of 10x Research, noted that oversold conditions might trigger a counter-trend rally, especially if the Fed adopts a mildly dovish stance. He emphasized that this is more of a fine-tuning from policymakers rather than a major bullish development. Yet, it may pave the way for a broader consolidation range with a chance to reach $90,000. Investor confidence may also be bolstered by Fed Chair Jerome Powell's remarks that the central bank will remain on hold amid uncertainties faced by households and businesses. Powell even questioned the long-term inflationary effects of recent trade tariffs, drawing on past experiences where inflation pressures were temporary. All eyes now turn to the FOMC meeting for clues on the Fed's monetary policy for the rest of 2025, as its decisions could significantly impact risk assets like Bitcoin. Analysts like Ilya Kalchev point out that a dovish tone from Powell could encourage a shift in market sentiment, potentially ending the Fed's quantitative tightening program. Such a move would boost liquidity and support for risk assets, possibly propelling Bitcoin upward. Conversely, if inflation concerns persist or tight financial conditions continue, Bitcoin's recovery might be hindered. Meanwhile, recent cuts in U.S. equities by record percentages add to the mix of uncertainty, making the upcoming meeting a critical juncture for Bitcoin's next price move. Market watchers closely follow every move, as the FOMC meeting's outcome could decisively pivot not only Bitcoin, but the entire risk asset landscape. With high stakes, investor anticipation continues to build rapidly indeed. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.